Hello students, welcome to my YouTube channel Sun Academy. Today in this lecture we are going to solve another question of investment account in financial accounts. As question you can see is that on 1/1/20 Darshan Finance Limited holds 10% Gujarat government's loan at a price of 10 lakh being face value 9 lakh. Interest dates are 31st March and 30th September. Transaction on 1/2 loan of 12 lakh being purchased at 98% come interest. Loan of 8 lakh being sold on 1st March at 102% ex interest. Loan of 5 lakh being sold on 1/6 at 97% come interest. And loan of 6 lakh being purchased at 101% ex interest on 16th 9. Brokerage is to be calculated 1% on market value while stock is to be maintained with LIFO method. Now students, first of all, opening stock is given face value 9 lakh and cost price 10 lakh on 1/1/20 to balance BD, that is opening stock face value is 9 lakh and cost price is 10 lakh. Now as you saw, the interest dates are 31st March and 30th September, and we are preparing account on 1st January, so we will have to calculate a due interest for 1/1/20. Face value is 9 lakh and 10% is to be calculated for 3 months. So 10% will be 9,000 and 1/4 portion of 9,000. How 1/4? 3 1 3. Half of the 9,000 will be 4,500 while its half will be 2,250. So the due interest will be 2,250. 10% of 9 lakh will be 9,000, half of it will be 4,500 and again its half will be 2,250. Then after first transaction is on 1st February, come interest purchase. On 1/2/20, cost 1/2/20 to bank account, come interest purchase, it is face value or nominal value being 12 lakh, cost price we will calculate 12 lakh into 98%, 1% will be 12,000 and 2% will be 24. So 11 lakh 76,000. Interest on 12 lakh 10% on 1/2. Last interest being received on 30th September, so October, November, December, January, for 4 months. That will be 4 1 ja 4, 4 3 ja 12 divided by 3, so it will be 4000. 12 lakh into 10% into, then after brokerage 1176,000 into 1%, 11 lakh 76,000, so that will be 11,760. Now interest will be subtracted and brokerage will be added. So 11 lakh 76,000 minus 4,000, sorry, 40,000. 11 lakh 76,000, that is 40,000 interest, not 4,000, plus 1176. 11 lakh 47,760 will be the cost price. 11,000 to 11 lakh 47,760. Interest is 40,000. Then after transaction is on 1/9 sale X interest. Sorry, on 1st March X interest sale, that is 8 lakh. On 1st March 20, 1/3/20 by bank account sale, and that is X interest. Face value is 8 lakh. We have to find the cost value. It is being sold at 102%. So 8 lakh 16,000 interest. Next due interest is on 31st March. This is being sold on 1st March. So interest of 5 months will be calculated. 10%. 5 months. 10% will be 8,000. 8,000 into 5 divided by 12. Interest will be 16,667. 8 lakh into 10%. 33,334. Sorry, 8 lakh into 10% will be 80,000 into 5 divided by 12. 33,334. Brokerage will be 1% of 8 lakh 16,000. 8,160. Now sale is X interest, so only brokerage will be subtracted. 8 lakh 16,000 minus 8160. So 8 lakh 7,840 will be his final price. 8,07,840. Interest was 33,334. Next comes date 1st June, but before that, interest must be received on 31st March 20 by bank account on which amount 9 lakh plus 12 lakh 21 lakh, out of which securities of 8 lakh are being sold. So on 13 lakh interest received on 13 lakh for 6 months, 10%. 10% will be 13,000. Half of that will be 6,500. 5,000. Then after on 1st June sale is being made. Sale, that is come interest 5 lakh. Date is 1st June and this date was 31st March. Now cost 5 lakh into 97 percentage. So 1% will be 5,000, 15,000 will be subtracted, 4 lakh 85,000. Interest on 5 lakh, 10% will be 50,000. For how many months? Last interest was calculated on 31st March, so April and May, for 2 months. For 1 month, that is 50,000 divided by 6, 8,334. 5 lakh into 10% into 2 divided by 12. Brokerage 4,85,000 into 1%, that will be 4,850. So sale is come interest and there is sale, so both interest and brokerage will be subtracted out of 4,85,000 minus 8,334 minus 4,850. So 47 lakh 4,71,816. 4,71,816. Interest is 8,334. Then after securities of 6 lakh are being purchased on 16th 9. Bank account X interest purchase 6 lakh X interest purchase cost price, that is 101% of 6 lakh, 6 lakh and 6,000. Interest, purchase date is 16th 9. Interest was last calculated on 31st March, and next is to be calculated on 30th September. So for April, May, June, July, August and half month of September, 10%, 5 and half month. 10% will be 6,000. So 6,000 divided by 12 into 5.5, that is 2750. 6 lakh into 10%, 27,500. Then after brokerage, 6 lakh, 6,000 into 1% will be 60. There is purchase, so brokerage will be added. 6 lakh 6,000 plus 60. 6 lakh 12,000 60 on the debit side of the investment account. Now last we have to calculate due interest. On which amount? 9 and 12, 21 and 6, 27, out of which 13 lakh has been sold. So on 14 lakh, 10%, 3 months, that is 35,000. On 31st December, due interest is 35,000. At last, closing stock. Now you see, we had to calculate closing stock as per LIFO method. How? On 1st March, securities of 8 lakh were sold. So first, this will be sold from securities of 12 lakh, means balance of 4 lakh will remain as it is. Then after sale was 5 lakh, so that will be sold out of, on 16th 9 this has been purchased. Let me show you on the board. We had balance on 1/1/20, balance was 9 lakh. Then after on 1/2 is being purchased of 12 lakh, and then after 16th 9 purchased of 6 lakh. On 1st March, securities is sold of 8 lakh. So that will be sold from this amount. So security of 9 lakh and 4 lakh will remain as it is. Next sale is on 1/6/20 of 5 lakh on 1/6. This is purchase the date after this date. So security of this 4 lakh will be sold first and 1 lakh will be sold from this. So balance will remain 8 lakh of the security of 9 lakh and last purchase of 6 lakh. Last purchase of 6 lakh. 31st March 12 by balance CD 14 lakh. Now cost is to be calculated. 9 lakh security was purchased at 10 lakh. I am showing you here again. Balance remained 8 lakh and last purchase security of 9 lakh was being purchased at 10 lakh. So balance of 8 lakh will be 8,88,888 and this is being purchased at 6,12,060 plus 8888 15,948 will be the value of the closing stock. Now we will find the profit or loss. So 8,07,840 plus 4,71,816 plus 15,948 minus 10 lakh 11,47,760 6 lakh 12,060. Profit is only of 20,784. 31st December 20 to profit and loss account. Then after amount of interest that will be 71,918. Let me check first the due opening interest. That must be 9 lakh into 3, that is 22,500. So let me do the total again. 33,334 plus 65,000 plus 83,334 plus 35,000 minus 22,500 minus 40,000 minus 27,000, that is 51,668. I have some doubt on this interest also, so let me check this also. 5 lakh into 10%, 50,000 into 2 months. This is the right figure. So in this way we have to complete this sum. Let me Write all the totals 8 and 5, 13 and 14, 27 lakh. And then after 8 lakh 7,840, 4 lakh 71,816, 27 lakh 26,604, and amount of column of interest is 1,41,668. As you would have seen that I was finding difficulty many times because my specs number has changed, so I am not comfortable with this spec, as this is specs of near and far. Let us repeat again this question. We had loan of Gujarat government, face value of 9 lakh and cost price 10 lakh on the debit side of the investment account. We had to calculate due interest for 3 months, as interest dates are 31st March and 30th September. We are starting the account from 1/1. So interest of 3 months will be due on 9 lakh 10% 3 month. And then after there was a purchase of securities of 12 lakh on 1st Feb at 98% com interest. 12 lakh was written in the column of face value, cost price 98% of 12 lakh, interest 10% of 12 lakh for 4 months. How? October, November, December, January, that is 40,000, and brokerage 1% of cost price 11760. This is purchase, so brokerage will be added and interest will be subtracted because this is the cum interest purchase. Interest in the column of interest, while cost price in the column of cost price. Check it again. So because of I has told specs, I was finding a little bit difficulty. That is right. Then after there is a sale of X interest securities of 8 lakh, 8 lakh 102%, 8 lakh 16,000, interest 10% for 5 months, that is 33,334. Interest in the column of interest 33,334. Brokerage 1% of cost, so 1% of 8,16,8160. There is a sale, so brokerage will be subtracted from 8,16,8160 will be subtracted, and we will get the final cost price 8,07,840 on the credit side of the account. Then date will come for interest received 9 and 12, 21, out of which securities of 8 lakh are being sold. So on 13 lakh 10% for 6 month interest will come 65,000 on the credit side of the investment account. Then after on 1st June securities of 5 lakh are being sold, face value 97% will be calculated 48 lakh 4 lakh 85,000. Interest 10% of 2 months. How 2 months? April and May, because last interest was received on 31st March. Brokerage 1% of 4 lakh 85,000, 4850, which will be subtracted, and interest also will be subtracted, and amount will come 4,85,000 minus 4,850 minus 8,334, that is 4,71,816 on the credit side of the account. Then after on 16th 9 securities of 6 lakh are being purchased. On the debit side, X interest at 101%, interest 10% for 5.5 months, and brokerage 1% of 6 lakh 6,000. So amount will be 6 lakh 6,000 minus 60, that came to 6 lakh 6,000 minus there is a purchase for 60 will be added 6 lakh 12,060 and interest, because interest is X, so it will be written as it is. Then after we have to calculate due interest on 14 lakh for 3 months, that came to 35,000 on the credit side. Total of 27 lakh were purchased and 13 lakh of securities were sold, so on 14 lakh interest will come to 35,000. The important point of this question is stock is being calculated or found out as per LIFO method. So first security is one which was sold of 8 lakh will be subtracted from this security, because on this date both these securities were on hand. So as per LIFO method, which was last purchase will be released first. Balance of this security will remain 4 lakh. Now security of 5 lakh are being sold, so first 4 lakh this will be released and 1 lakh from this. Now securities of 9 lakh were costed at 10 lakh, so balance security of 8 lakh will be costed at 8,88,888, and security of 6 lakh were costed at 6,12,060. So total amount will be 15 lakh 948. Now adding total of credit side and subtracting these three figures, we will receive the profit, and adding the credit total of the interest column, that is 1,41,668, and subtracting these three figures, we will find the amount which will be transferred to profit and loss account. Now if you want to learn more of this chapter, do follow the coming lectures of ours, and if you haven't still subscribed, do subscribe. If you are not sharing the link of our channel, share the link, and if you are still not commenting, do comment.